Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today's Saturday afternoon time. Hope you guys enjoying your weekend and hope you guys have a good week. Let's continue with our analysis as usual. Let's start with the Spider, Diamond, Qs, Russell, Semi, and the banks. Thank you for your patience. I had a couple things I had to take care of yesterday, and so I was not able to put out the video. But you know, I actually like doing the videos on Saturdays instead of Friday, right? And Friday, obviously, you know, a lot of things are going on. Sometimes I rush things because, well, Friday I want to do my video, I want to get out. You know, sometimes I have a place to go, so I like to, you know, I do the videos on Friday usually, you know, intraday when the market is still open. But I love to do them when the market is quiet. You know, I actually do most of my analysis, you know, at night when the market is quiet, you know, maybe 8 p.m. or something like that. You know, I sometimes I'll open up my, you know, trading station, my screens, my computer, and just kind of look through the market throughout, you know, during the day, you know, and you guys see me, if you guys follow me on Twitter, you don't see me like tweeting early in the morning. Usually it's like midday. It's because I actually don't look at the market early in the morning. I mean, I'm up and I also run a business here locally, so I'm doing other things, but I don't look at, sometimes I do, but most times I don't. That's why you'll see me tweeting it out like, you know, midday or like 2 hours later. It's because I don't look at it like, these are the things I'm going to tell you. I don't look at pre-market. I don't usually watch first 2 hours in the market. And I don't look at post-market, and I don't watch futures. So those are things that I do if you're interested, because first 2 hours is just, sometimes there's a lot of volatility, and you know, it's gonna get you riled up. You know, it gets you emotional. And you guys know that I'm not a short-term trader, I'm not a swing trader, I'm not a day trader. I'm a position trader and an active investor. So I hold things much, much longer than most traders that you find on Twitter or social media. So I don't need to look at the market first 2 hours. I don't do that. So that's why you see me, you know, tweeting things out usually midday. It's because that's when I open up my charts, and that's kind of when I look at it. When the market is kind of, usually midday, market is kind of settled, right? Because usually market gets a little bit wild in the first 2 hours. Usually in the midday, market is kind of settled. So you can get a good gauge of what's going to be for the day, right? And if nothing happens, you don't hear me, you know, I don't tweet things out every day because there's some days nothing happens, right? So I look at the market when the market is open in a midday. Sometimes I'll look at it for like 20 minutes. I'll go through all of my positions, see what they're doing, and then if there's anything going on, I shut off my computer, and I don't look at it until, you know, late that day, like maybe 7, 8, 9 p.m. when the market is very, very quiet. Some days I don't even look at it at all until next day, right? You know, I wouldn't recommend sitting there watching this thing like all throughout the day. I mean, that's a total waste of time. You know what I mean? Like, there are people who does, and it's usually people who sit there and watch it all day is because they're shorter term. They trading in a short quickly, and they're just worrying that something is going to happen while they're gone, right? So I would recommend to be more longer term, and I would recommend you to not look at the market in the first 2 hours. Don't worry about the pre-market. Don't worry about the post-market. Don't worry about the futures. Just do not worry about the futures. That's, you start going into that road, watching the futures, you know, you're just going to waste your precious time. At night, you should relax. At night, you should read some books, you know, have some tea, relax before going to bed, right? Do not watch futures, get all riled up and worry about what's going to happen next day. A lot of people do that, right? Especially if you follow people on Twitter and StockTwits. I'm not on StockTwits anymore. I really think the StockTwits is pretty stupid, especially people in it. Just bunch of amateurs, probably with, like, you know, these lot of young people. I think, you know, a lot of millennials with, I don't know, $2,000-$3,000 account or something like that, trading Bitcoins and day trading penny stocks and, you know, trading like weekly options with $200. I don't know. It just seems like a total crappy place. So I'm out of that place. And anyway, so let's start with Spider. I think I had more time today, so I don't have to rush this video. So I'll do my best to thoroughly analyze kind of more in detail today, right? Let's recap with everything though, just kind of refresh our memory. So obviously we saw 25% move, the V-shaped reversal since the 20% correction. We got 20% corrections, 25% move. There has never been, we talked about this, there has never been where you see a 20% corrections on the S&P and we see a V-shaped reversal. Never. Go back to your charts and find it, if you can find it, where there was have been 20% corrections and that thing V-shaped and it went all the way back up to new all-time highs in 1 quarter. You will not find it, right? You will not find it. I mean, it's not 1 quarter since December. I mean, maybe 1 quarter and a month, right? 1 quarter and a month. But you will not find it. So I think that's what everybody was expecting. That's why sometimes, you have a lot of these guys pushing out stats, right? Statistics. When this happened, how many percentage market did that, right? I think there's some use for it. Just kind of get a good gauge of probability. But in a crucial moment like this, because no stats could able to determine, to predict this. No stats, because we've never seen it. So after 20% decline, everybody was expecting double bottom, triple bottom, at least the consolidation to, it needs time to heal. That's what might be a lot of people are thinking. Or maybe even, I think most people are also thinking, oh, the bear market is here. The recession is going to come. The 1929 Great Depression is here. 1987 Black Monday is here. Those people have been saying this for the last 10 years. And I've been kind of harping on that for a while. Don't ever listen to this. Don't ever look at any charts. If there's anybody overlaying charts, so they overlay like 1987 or 1929, and then they kind of overlay it with the chart today, and they try to call top that way. Nobody has ever succeeded doing that. Ever. I mean, it looks kind of cool when you do. It's like, oh my God, well, look at that, right? Only suckers get into the game. I don't understand. There's so many people always retweeting these stupid things. Just think of it this way. Market always fool the majority. So if a majority people are retweeting and liking certain things, it ain't gonna work. You see what I'm saying? So keep that in mind. If everybody likes something, it's probably not gonna work. Just think about the sentiment in late 2018 in December. How many people do you know that called this bottom? Everybody was panicking. What can you point to me? Anybody was bullish here? Where? Find me somebody. Not just kind of thinking it could be bullish, or they're saying, well, kind of, yeah, I don't know, we could see a bounce, but flat out, you know what? This thing we're gonna see bottom here. We're gonna V-shape reversal. We're gonna go all the way back to 300. Who? You're not gonna find anyone, right? It's because everybody was start looking at, okay, when we have that 20% decline, how did market recover? Well, we saw 20% historically. You go back and you check your stats and your charts, you're going to see their double bottom. You're going to see consolidation, or you're going to see maybe making even lower low, or even a recession or bear market. You will never see happening the market printing V-shaped reversal after 20%. Not after 20%. This is the first time. And market is good at that. So stats sometimes has some good use for it, just giving you some probabilistic idea. But it's when it comes a crucial moment, because can you imagine what such a opportunity this has been? And I was buying down here. And if you've been following me throughout this year, I even had a video on January 5th, right? And I called it that V-shaped reversal is going to happen all day, come up here. So we talked about that, right? So then we got up. We had a 25% move to the upside. I'm just recapping everything again. And then around April time, I talked about I'm expecting 5 to 8% correction, right? 5 to 8% correction. And we saw 7% correction entire May, right? And then in that corrections, everybody's talking about head and shoulder formation. That head and shoulder formation scared the hell out of a lot of people. A lot of longs who chased it up here, they got scared. They closed it out after seeing the head and shoulder formation. The shorts who got exhausted shorting this, losing all kinds of money throughout this entire year, maybe came back shorting this because of this head and shoulder formation, right? And then as it starts to go up, they probably kept adding. And then what happened? We saw another V shape. And it's funny because I remember seeing a lot of these headlines, even like this mainstream headlines, right? I think it was like, I don't know, something about like, oh, Morgan Stanley reports buying the dip is no longer prudent. You guys remember the headline? Is that zero hedge or it was some, it doesn't matter because I all think that all of them are garbage, right? Buying the dip is no longer prudent. Something like that, right? Everybody's like, the dip buyers. Look at this has been the biggest dip buying opportunity ever. Market went up 25% in 4 months. 4 months. That has been the biggest dip buying opportunity. And not only that, if we didn't catch that, we saw 8% or 7% correction, right? And in just 3 weeks, right? In 3 weeks, it completely regained its losses that happened entire May. And that also has been a great level for buying the dip. So we've been seeing these V-shaped reversals. And and these steeper pullbacks has been great opportunity. We've been talking about that, right? So let's talk gaps, because we've been tracking gaps throughout this entire year, right? So everything started with gap. There's a big gap down here, right? This opened here, closed there, and it opened here next day, right? So there's a gap. That was a breakaway gap. And then we had these continuation gap, another continuation gap, and this turned out to be an exhaustion gap, right? Because we knew that because when this thing came about. We also talked about on my video back in early June, when the gap gets filled, a lot of times what? It usually reacts as resistance, right? Do you guys remember this? Usually reacts as resistance. Either market is going to pull back or pause at least several days. But when we see, and we talked about, so you can again go back, check my market update videos. When you see, when the gap gets filled and it thrusted above it and continues higher next day, that's very bullish. You guys remember this when I talked about it in early June. And I also compared it. We saw something like this back in January 4th, right? This is when I called V-shaped reversal, right? Again, there's a video on January 4th, right? I think 4th was Friday, 5th was Sunday or Saturday. I might have done it on Saturday. But this is when I called there could be a V-shaped reversal. It's going to come all the way back to 290-300. You guys remember that? But it all started with this gap down. We see that gap down. Not only did we see a gap down, we see a flush. Not only we see a flush, we already seen 20% decline. So the sentiment is extremely bearish at this point. Extremely, extremely bearish. Not only sentiment is bearish, the trend is bearish, everything is bearish. I mean, there's super fear in the Wall Street, right? In Wall Street. And it's just, we see that gap down, and I think the fears start coming back in because, you know, when this thing saw this huge, like it was like 3.2% move or something like, or 4% move. How much move was that? Oh, it was 5% move. So that was a 5% day move. But, you know, when you see a steep decline, you see something like that. Even when the market was crashing in 2008, you will see stuff like this a day or two, but market, you know, goes right back in. Market goes right back in. You know, bear market, you're gonna see these very fast one-day move, like 4%, 5%. And then it goes up a little bit, and then there's some volatility, and it goes right back in. I think that's what everybody was thinking here because we saw big gap down right here, right? And then we saw a flush to the downside. And then next day gapped up, and you can see it filled the gap, but we didn't pause. Because once we get, you know, we talked about once gap gets filled, it does act as resistance. It didn't pause. It didn't pull back. It continued higher next day. And that was that early signal of the strength. And that's when I came, right, on the 4th, right, that was Friday, that we're gonna see a V-shaped reversal to the 9300. Something happened here. That's what happened here. Same thing. This is why it's very, very important if you track gaps. And that's why we've been tracking gaps throughout pretty much entire this year. This gap was filled. That's a pretty decent sized gap down. Look at that gap from 279 to 275. That's a big gap down. We thrusted above it. We never pulled back. And that was a tell. That was a tell. There's a lot of strength. And we talked about this in early June. And that thing just went straight up to new all-time highs. And then last Friday, right? Last Friday, I talked about this potentially being an exhaustion gap because of the sequence of this up and down, right? Because it got up here and gapped up. And it came down, filled the gap, and it went right back up. That one-day sequence after this kind of V-shaped reversal move, and we already made what? 8.5% run, right? We had a 7% decline and with an 8.4% run to the upside, right? It actually went faster to the upside than coming down. Isn't that interesting? Because a lot of people think that actually market moves down faster than going up. But it's been kind of opposite this year ever since it bottomed in late December of last year. It actually went up faster than coming down. And that same thing happened. Entire May, this is 15 days of trading, right? So we talked about it, and I talked about this thing potentially coming back down. Okay, last Friday we talked about that, potentially coming back down. And this thing coming here, right? And retesting, or at least challenging the gap area. Remember that? Well, it did challenge the gap, but there's certain problems for bears. It never filled the gap entirely. When the gap is not completely filled, it is actually, it favors the buyers. If it's up gap that it was not entirely filled, it actually favors the bulls. If it's a down gap, and it is entirely filled, bulls doesn't entirely fill the down gap. It fills a little bit, but not entirely. It actually favors the bears. In this case, you can see the gap was not fully filled. What bears need to do is come and fill the gap entirely. It didn't do that. So if I go to hourly chart, and I made this for you guys, I put these things together here today, just earlier before I put this video out. You can see this gap, this partial gap. It filled the partial gap, half of it, but it was not able to fill all of it. And that started another gap. That started another gap. You see that, right? So we got 3 little gaps here. See, here's what I'm saying. If you go to a 65-minute here, you see there's this big gap up. Do you see this gap up? We had a big gap up. It fell down. It gapped up again. And then bears start bringing it up. And it really wants to fill that gap. What happened? The gap wasn't entirely filled. There's a little gap open. So gap is not always the pocket, right? I mean, if you go to like 5-minute, you'll see it. Because it closed here. That's where it closed. You see, you gotta look at the candle, right? That's where it closed the day on, June 7th. It opened June 10th here. So you see how this it closed here, and because I get questions sometimes, well, there's no gap. There is a gap if you go to smaller intraday time frame. So it opened here, or it closed here, it gapped here, so that this is entire gap right here. Right? And you can see how this thing came down, bears trying to fill it, and it left a little bit, just a little bit, was not able to completely fill that. That favors the buyers. That favors a buyer. And if you go really, you want to be really precise about it, you can even say that we have a little tiny gap here. If you want to be precise about it, there's a little tiny gap here also, was not able to fill. So that has been the kind of a trend where we get a big gap, bears trying to come and fill it. It fails to fill entirety of that gap, and then bulls bring it back. Bulls bring it back, right? And then bulls brought it back. And that's kind of what's been happening, right? And I draw that trend line here. It seems like that's what we've been kind of holding up here. You can just support. And we have all these gaps up gaps still open, right? We got a little bit of down gap here that wasn't filled. See that little down gap? Again, it's the same thing, same logic, right? Look at that. So this was where it closed. That's where it opened, right? So gap started from here to here. Bulls brought it up. What happened? It was not able to fill that gap, not entirely. That's when it favored the bears, right? It's the same logic. It's just opposite way. Talking about the bears. The bulls needed to fill it all the way. And then we'll probably see instant resistance from that. And then we could probably find some support somewhere here and maybe trying to gap back up. But not able to filling this gap, right? Not able to filling that gap, entirety of this gap, opening that little bit of gap here, that down gap. That's when the bears took advantage of that situation and brought it back. But when the bears brought it back, they also failed. Came short, not able to fill this gap. And then bulls brought it back up, right? So that's kind of what happened this week. And we also been talking about last week that there's potentially a risk for island top reversal. We never got that. You know what I mean? It would have been better. Also, I tweeted out that it would have been better if this thing came down, filled it. Because again, when the gap gets filled, what does it do? It acts as support and then possibly bounce. So I didn't want to see, for the bulls, I didn't want to see this thing gapping down here. Then for sure we're going to come down to what, 285s. If this would have been island top. Well, now things got very complicated for the bears because it's hard to do island top when there's so many gaps. Because let's say this thing gaps down here. Well, there's gaps here. So can feel that and then act as support. It would have been the best here to gap down here. Now, let's say on Monday we gap down. Well, we have a gap here now. That's going to act as support. Unless we see a big gap down to here, which is 288. Which is 288. If this thing has up from 292, that is what? How much percentage is it from here? That's where it closed. That has to be 1.3% gap down. Have we seen that kind of gap down? We've actually seen something like that. I think we've seen from here to, no, from today. That's like what? 1% gap down. Is there any bigger gap? Yeah, I think we've seen it right here. From here to here. Yeah, that was 1.97% gap down. So we've seen some big gap downs. So we cannot completely rule that out. So if the bears still want to make this into an island top, they have to gap it down below 289.34. But if this price still floats around, the longer the price floats around, like it's, it doesn't go much, but it's like move sideways and kind of, grinding, that is going to favor the buyers. The longer it floats around, the more, because we already are up here. So we're in that bullish sentiment, right? We're already in that bullish trend. You can see my 20 MA rising, 50 MA rising, 100 SMA. The more it kind of lingers around, the more it's going to favor the buyers. The more likely it's going to resolve to the upside. So what the bears need to do is just, after boom, 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 like that. Because they don't like, the way the bears moves, they don't like floating around. They want to bring it down fast. Like here, you see how we gapped down, Bruce brought it back up, and then we came down again, right? Brought it back up right away, got up here, and then came back down. There wasn't much of floating around. But look at this one, floating around too long, boom, right? Like even here, floating around too long, got back up, right? Floating around for too long, got back up. So at this point with these gaps here, I have to say that the this binary term trend is starting to get momentum, and that there's a chance that this could continue higher to 300, right? Unless we see this thing just out of nowhere gapping down, about 1.3% gap down to below 289. So watch this. So there's still a little bit of risk of potentially seeing island top, but any smaller gap downs isn't going to cut it. Any smaller gap down is going to correct because of these gaps and because of there's too many support areas. If bears want to see 285, they need to gap it down pretty heavily. So we'll take a look, and we'll see how it plays out next week. Oh, I have an announcement next Wednesday. Obviously, it's gonna be half day, Thursday the 4th. So because I'm gonna be traveling and stuff with my family next week. So I'm going to skip the market update video next week. So we're gonna resume back with the market update videos on not next week, July 11th, right? So I'm going to spend a lot of time today in detail to explain these things, kind of give you guys guidance for the next week. So if we continue higher, you know, there's a little bit of gap. So let's do that. Just a little tiny gap. It's not going to do much. Yeah, because we talked about that. Yeah, there's a little gap here. You see that? That's that. So we'll just kind of put that here, just a little one. I don't think it's going to do much. So I think there's where we're starting to see momentum shifting here. I think minor term, we still can categorize this as bullish sentiment. The trend is bullish. With you know, after this kind of move, obviously we're going to see some shenanigans here. I do think there could be still some you know, up and down moves in the minor term. But the overall market is looking bullish here, and the next target is to 300. So if I see any kind of island top reversal like I've been talking about, I'll tweet it out. You can, you know, follow me at 2K Kim. But I think 300 is gonna be the next target for the S&P. So let's continue to track the gaps. Let's continue to watch these levels, right? And let's see how the market plays out next week. Again, Wednesday, half day Wednesday. Thursday, market is closed. Friday, I believe market is open. No market update video next week. I'll be traveling, so I might not able to, you know, be active with the tweeting and things like that. But if I do see something crucial, I will tweet it out. If I do see market gapping down, you know, here, and this becoming entirely thing of a, you know, island top, I'll tweet it out for you guys. And at that, if that happens, we're probably gonna come retest at 100 SMA, which is 284.49. But if we do see that at 284, that would be probably gonna act as pretty strong support, and I would actually buy this again if you're long term. Because it could fizzle and come down a little lower or something like that. But that's kind of where it's gonna be. And I can also give you the fib levels for short-term fibs. There, so just in case we get shenanigans, you can see that that's the first level, which is coinciding with the 50 MA. That's the second level. You see that's coinciding with the gap fill area, and then there's the last level, which is slightly below 100 SMA. But sometimes market can kind of fizzle around. I think if we do see a gap down, that level will probably act as pretty strong support before going back up and going to 300. So either if we don't see a gap down, we don't see an island top, if this thing fizzles around, maybe even fill this gap a little bit next week, it's gonna go right back up and fill that gap, pause a little bit, go to 300. Let's go to diamond. Diamond hasn't even begun to retest this gap area. Looks much quieter because of that, and looks like potentially another bull pennant type of pattern here. We got a bull pennant here and another one here. We got up, consolidate, got up, consolidate. It's been consolidating too long though. Again, the longer it floats around, it favored the bulls. But again, you guys know that it could break out either side. It could break out to the downside, it could break out to the upside, but just the way, I mean, this on the diamond though, we don't have any risk of, you know, seeing any kind of island top or anything like that. We're far away from this gap, so that's actually a good thing. Actually, diamond could actually even help out with the S&P here. So still though, 263, 261 is a level. If this thing continues to drip lower, we'll probably come and retest that 263 before finding support, or we might break out here to 272 level. That's my next resistance level. We talked about that last Friday, and that's that here, and that's right here. So that's probably where it's gonna go, right? Let's go to Qs. So Q, same thing. We opened partial gap, bears was not able to fill the gap of entirety of this gap, as you can see right here. See, this is gap. It left this gap, was not able to fill it completely. Same thing happened here. You see, got up, came down, not able to fill that gap completely. Not filling that gap completely. Same thing here a little bit. See, there was this gap, not filled it completely here, little gap. You can probably do that. Yeah, there you go. Do that. So you can see this gap wasn't filled. Not only that, not only it wasn't filled, we opened up another gap because that's where it closed, that's where it opened. So we opened up this gap and then it's been grinding higher. The longer it kind of grinds, it floats around, it's going to favor the buyer, especially with the gaps here. That gap needs to be filled. If the bears want to see anything, you know, again, if Q's going to make this into an island top, gotta bring this down to below 183 and see a big island top, and that would be 1.8%, about 1.8% gap down, and that's a big gap down. You're not gonna see it all the time. So 1.8% is so probability of seeing an island top. That probability is getting lower. Doesn't mean it's never gonna happen. Obviously, anything can happen, but that's all we have. It's the way we trade this market is we're playing the probability, right? Right now, probability favors the buyers. Let's go to Russell 2000. So Russell 2000, so Russell 2000, we talked about this level, right? Last week, you guys remember this level? That neckline channel, right? This was a flop, right? And then we had another flop where, you know, this thing was the support. This was the horizontal support. We talked about this back in early June, that this is probably going to be the level that where a lot of people place their stop just underneath this low, or they maybe draw this and they place their stop here. Market knows it before it goes up there. Well, you know, a lot of people are chasing it up here and they're going to place their stop. Maybe some people place their stop here, some people place their stop here. So start coming down, take out their stop. Maybe some people say, you know what, I want to place my stop that, you know, prior low, that prior intermediate low. So then they place stop just beneath it. Market takes it out, gets right back up. You have to understand how to look at things in the longer term, because if you just zooming in here like this and this is all you look at it, that does look like potentially bear reversal is coming, or the, you know what I mean, that the downtrend is coming, because look at that. That came and made a lower low. So what is the definition of that downtrend? Lower lows and lower highs. So you're gonna think that, okay, that's a lower low. It's gonna go up to create a lower high coming back down, because you're looking at things too closely. So now when this thing pulls back, it's like, aha, look at that. Lower low. That's a high. Yeah, man, we're in a downtrend, bro. I'm gonna short this, man. And then this thing creates higher low. And now things kind of turn, because now it looks like potentially even inverted head and shoulders on the right shoulder. Do you know why? Because we actually got this big inverted head and shoulders already going. You know what? Let's go to this is daily. So we already have, and I'm spending extra time for you guys today because I'm not going to be doing video next week. So we already got this massive potentially inverted head and shoulders, right? On top of that, now we had that flop. So it's almost like this is happening here too. It's a smaller version, right? Isn't that crazy? Like, market just knows how to do that. But if you do this, if you look at this, now we have, this is what you call equal highs in the minor term. I even called it a micro term, right? So that's what we have. We're back here. If this thing starts going higher, which I think it will, we're gonna start to create higher lows, higher. So you see how, that's why, you know, that's why market is so good at finding out what most people are looking at and just doing the opposite. And you guys know my TQQQ trade. I've been journaling that out, and I talked about how my TQQQ trade, my calls on TQQQ that I bought at what, 50s, right? I bought it at 50s. Is mostly what? Psychological. Remember I talked about that. Psychological. That everybody's gonna think that this is a reversal pattern with this head and shoulder formation. But I think it's a trap. I think it's gonna lure in more shorts, and I think it's gonna make the bulls be scared to get out before reversing back up, right? And market is just really good at that. Market is really good at figuring out what is the level that if anybody went long anywhere here, what's the level, right? Let's say any short-term traders went long with calls, right? What level is it that they just can't deal with anymore? They're in such a deep pain, losing money, they can't hold any longer. It will be down here. It will be down here, right? It will be down here. That's why I never like going into a trade with the breakout. See, people draw things like this, right? They'll be like, okay, that's that, and that's that. Oh man, look at this breakout, right? That's what they'll say. That's the breakout. Here, that's how short-term traders trade. They'll draw something like this, right? And that's a breakout. That's a breakout because we've been consolidating. You see that? So they're like, okay, well, look at that, got the higher low there. That's a breakout. So then what they'll do is they might go long here somewhere. Either they place their stop here or here or here, depending on, you know, how much leniency they're going to have and the risk tolerance. Market is going to come down and take out all of those stops and then go. So how should your strategy be? Well, don't chase that. Don't chase any of these short-term consolidating breakout patterns, right? That's not what I would do. I would actually think going long anywhere here would have been good. Going long here would have been good, or here would have been good, right? And give more time and be patient for this breakout, right? And go for sometime 175. Without patience, you can't able to trade those. You can't able to get big gains, right? Let's go to semis. Semis, yeah, right? Gave you that fib level. We got up, pull back. We talked about it. That's a pretty decent sized pullback, and that's what it needed it. These little pullbacks is not gonna cut it for the primary term uptrend to be developed. We need sizable pullback. See, the problem with that, a lot of people, is they don't want to see a pullback, even if they're long. Or when they're long, they don't want to see a pullback. They want that stock or index to continue higher. That's actually not right way of looking at things, because without a pullback, we don't have uptrend. And these little uptrend is not going to cut it, ladies and gentlemen. We need a bigger uptrend because that's pretty much straight up. Straight up move is not stable. Trend can never be sustainable with the straight up move. We sooner or later going to need that intermediate term high and low where it comes back down about 50% of its move, usually about 50 to 60% before getting a leg higher. See, this is when everybody gets in trouble because people don't see when they're long, like, and usually they don't go long here or here. They usually want to go long here, hoping we get that move. So they want to catch that move. That's a wrong approach. That's a wrong approach. Understanding longer term will really help you out with finding the levels and understanding. You don't have to get precisely bottom every time when you can enter a trade. You don't have to try to go long right here. Let's say if you're long here, let's just say, and here, you bought the dip here. It's not too bad. It's not too bad. Right? Let's say you bought it a first level of fib, a second level of fib, and that was your strategy. But you know what? You're more lenient with your stop, and your target is much higher, right? Then this little move is nothing, and you didn't act emotionally. But semis, we just fill this gap here. I'm gonna get rid of that, right? And we got that gap to go. So that's a nice higher low we have so far. And again, if I go to the hourly chart, doesn't it look like what we talked about on the Russell 2000? Then we talked about this just now: left shoulder, head, right shoulder. Right? Let's go back to Russell 2000. Yeah, left shoulder, head, right shoulder. Interesting, right? Let's go to the banks. we'll call it a day with this one. So bang, same thing, right? We talked about this neckline area. And we also talked about that, you know what, I won't be surprised this in coming down below it. Not only that, do you guys remember back in late March, I also talked about I don't be surprised this in coming down here, making new lows because people chase it up here, place theirs up here and here, right? Market came down, take all those stops, just V-shaped higher. So stop trading it that way. And you know, if you gotta understand intermediate primary term trend perspective, then I think you'll do better. And then same thing also happens. So there's a constant traps, there's constant fear, there's scare tactics that market is gonna implement, right? Because the market is gonna make sure majority of people are out before it makes a move. Market is not going to, you know, throw a red carpet and welcome you and make everybody a millionaire. Market is gonna make sure 90% of retail traders are going to not able to participate in the move. How many people do you know who bought in late December and able to rode this all the way up? Talk to anybody that you know. How many people? You're not going to find any. You're most likely not going to find any. Not only from retail traders, probably even quote-unquote experts and gurus you on Twitter. Maybe they wrote a little bit for like, you know, for like little bit and close it out. Do you know that I'm holding all of my positions, almost all of it that I bought down here today, now. All my long-term positions. Obviously, if I had calls or something like that, I closed them out. But if it was any longer term, like you guys remember I talked about it. What happened to my color change? Trying to get it back. And you guys remember I talked about it how, you know, I talked about how I started accumulating triple shares down here, right? Everything. SPXL, TQQQ, UDAO, SOXL, FOS, everything, right? And TINA, which is Russell 2000. I'm holding all of those. And then I start adding more down here. I'm holding all of that. And I don't say that in a bragging way. I'm just talking in a sense that, you know what I mean? Like, my target is much, much bigger, much longer, much, you know, higher. And so these little fluctuations ain't gonna like get me scared. That's what I was trying to get at. Like, it's not gonna get me scared. But if you're chasing the move though, like you went long here, chased it, these kind of moves gonna get you scared. You chased it up here after it cleared it, that move is gonna scare you out. Something that I always say is that to my members is that don't chase stocks, don't chase money, don't chase women, don't chase anything. Wait for right opportunity. Because once you start chasing anything in this world, including money, stocks, fame, whatever that is, whatever you're chasing has control over you. Think about these celebrities. I'm not talking about all celebrities, but think about some of these celebrities that they chase fame and they will do things. They will do things they don't want to do because they want that fame so much. Think about people. You know what I mean? Think about people chase money. They will con people. Think about Bernie Madoff. He's chasing money, status, and fame, right? And he con people because he can't trade. This Madoff never plays a single trade. This guy cannot trade. This guy's a you know, douchebag when it comes to the market. He cannot trade. But he want to act like he wanted to be a respectable figure in Wall Street. He was, but it was all fake. He chased it, right? And then now his whole life is sham, right? And another thing, I'll let you guys go with this. Like, you know, if you look at like Weinstein, you guys know Weinstein scandal, right? You know how Weinstein kind of raped these girls, whatever, or forced them into it, or he would promise a movie contract so he can sleep with them. And then you hear like these girls interview, like the reporter asked her, like, why did you go to his hotel room at like 11 p.m.? You know what she said? She said, well, he promised me movie contract. So you're chasing fame. So that what she should have said, no, I'm not comfortable going to your hotel room at 11 o'clock. It's late at night. Can I see you for lunch? And if he says no, then you should just drop it. But when you're chasing something so much, you know what I mean? You get emotional. You want to get that contract. Same thing happens in the market, right? Same thing happens in the market, right? You see this in breaking out. You got scared to even go long here, and finally you look at this. It's like, oh my God, man, the banks are breaking. You start going long here. You chased it, and then it's gonna punish you. It's gonna come down and punish you. That's how the market works. This is how this life works. Don't chase women. Don't chase fame. Don't chase money. Don't chase popularity. Don't chase anything. Wait for right opportunity, and have patience. Be disciplined in every approach you do at work, in life, in market. But whenever you chase anything, sooner or later, whatever that thing that chasing is come and punish you. Think about it. Single guys out there, you chasing women, do not chase women. Once you chase women, women can able to detect it like that. You chase women, they know they can control you, and you'll do anything just to get some from her. You guys know what I'm talking about. I mean, you'll do anything just to, get her to get attention to you. Don't chase anything. Actually, you're not even even going to able to find right opportunity by chasing. So this is actually what you need to do when you go to a party or whatever and you see a girl. Actually, when all the guys are paying attention to her, you shouldn't be paying attention. Wait for a right opportunity. I don't even know why I'm giving you this. Wait for a right opportunity. This is what happens, man. I started doing video on Saturday. I had a lot of time. I started talking. I'm a pretty social guy anyway. If you meet me in a real life, I'm a very social guy. But if you see her and all the guys are checking her out and giving her compliments and like everybody's you just want to talk to her and get her number, you should be the one who's not talking to her, because she knows it. She knows that all the guys are checking her out. She knows she can control all these guys. All these guys, one finger flip, they will just be all over her, right? So if you really want to even have a chance to get with her, you should just completely ignore her. And if the opportunity doesn't come later, then you should let it go. Just like a stock. You're watching a stock, everybody's talking about Apple, right? But you just know that this is not the right timing because everybody's talking about it. You shouldn't go in Apple. Do you know when I started buying Apple? Okay, now we're going into Apple. See, I actually started trading Apple down here, and then I closed out all my positions here. So I missed out this entire thing, but I never chased it. And everybody was talking Apple. Everybody was checking out Apple, man. And I didn't want to do anything to do with it. Apple was so sexy, right? Everybody want to get a piece of that Apple. But I'm just like, nah, I ain't chasing it. I'm ignoring Apple. So I didn't trade Apple entirety of this thing. And I had other trades that were working for me. But Apple, man, it did look sexy. But I just, I'm not going to chase it, man. I ain't chasing it. One thing I'm not going to do, doesn't matter how sexy she is, I ain't chasing it. And then right opportunities start coming to me when this thing start crashing down. That's my opportunity, and I got with Apple. Does that make sense? Do it like that with the girl. It's okay to let her go. Is she super hot? Everyone's paying attention to her? Let her go. Let her go. Don't ignore her. Don't chase that. But there's an opportunity comes. I don't know, like let's say you're outside smoking or something like that and she happened to be coming out, then talk to her. She knows you haven't been paying attention to her. She'll think that you're interesting because she's not going to put you in a level where the other douchebags are, right? Because she's going to already categorize all those guys as an easy target. Like, these guys are just douchebags, masturbators, man. Like, I don't want to, you know what I mean? I don't want to be with these. But same thing. Don't chase it. Don't ever chase it. Same thing, like Facebook. I didn't chase it. Oh, look at my Bison's still here. I bought it down here. I'm long on Facebook. I didn't trade Facebook entirety of this thing. I was trading a little bit down here, I think, and then I just kind of forgot about it. And the whole time Waze was moving, I didn't chase it. Doesn't matter how sexy it was. And then when it came down, you know what I did? I bought that. Same thing with Netflix. Oh, there's still my buys on there. I don't know why in the market. Did I give you these buy zones? Anyway, same thing with Netflix. I traded Netflix down here a little bit, up and down, but not entirely. And then this thing just started shooting up. I didn't chase it. I didn't chase it. It looks sexy. It looks definitely sexy. Everybody was talking about it. Facebook, Netflix, Tesla, everything. Everybody was talking about that. Nvidia, Amazon. Everybody was talking about it. It was sexy. I didn't trade this. You guys know, you guys know I was like trading Twitter at the time, and Intel, and other ones that had a great opportunity. I didn't chase Netflix. It didn't matter how sexy it was. And then my opportunity came here, 249, 233. I started buying it here and still holding that. That's kind of what I mean, right? That's what I'm saying. Don't chase it. Don't chase women. Don't chase stocks. Wait for the right opportunity. But at the same time, you must learn to let things go and wait for the right opportunity, right? And sometimes, let's say I find, I don't even know why we're talking about this. I'm a single guy, by the way. Maybe that's why. Let's say like you meet a girl or something like that. You should be willing to let her go. If fate has it that you must see her again, somehow you'll see her again, or somehow, her, I don't know, your friends, her friends or something. But you should able to learn. You should learn to let things go and not chase it. Even stocks, it's okay. Next opportunity come, it's okay to let things go. I think that you have full control with your life. You have full control with your trading system, right? You're not chasing it. I think that's a big lesson for me, and it took a while to master that. It just not chasing stocks, waiting for the right opportunity. I wasn't in Amazon, I wasn't in Tesla, I wasn't in Apple, Netflix, Facebook for entirety of 2017. Finally, when those things start coming down 50%, I started accumulating those. So I never chased it when it was sexy. When it had an opportunity, though, that's when I got in. I think that's the idea. There you go, 52 minutes. It's a long, but I hope you guys I enjoyed this video. There will be no market update video next week. And I'll come back to you guys. Have a great 4th. Have a good weekend. This weekend and next 4th weekend. I'll come back to you guys July 11th. Right? July 12th. July 12th. So have a good 4th with your family and friends. Have a great time this summer. And let's see how the market plays out in the next couple weeks. Have a wonderful weekend. I'll talk to you again July 12th or that weekend.